Welcome to the Real Estate Asset Management Podcast, brought to you by Break of Day Capital. The show focuses on educating syndicators and apartment owners on how to build systems and manage their properties more efficiently to become a best-in-class operator. 100% straight talk. Let's jump in. Hey everyone, welcome to another episode of the Real Estate Asset Management Podcast. I'm your host, Gary Lipsky. Be sure to join our Facebook group, Asset Management Mastery, where we have a great community of thousands of like-minded individuals sharing resources and best practices. Today on the podcast, we have my good friend, Juan Vargas. Juan, tell the listeners a little bit about yourself.
Hey, Gary. First of all, thank you for the opportunity to be on your show. Certainly appreciate it. Your show is one of the best ones out there. So, definitely do appreciate the opportunity. Juan Vargas, based out of Houston, Texas. Been involved in multifamily since 2016. Focusing on B&T multifamily for the most part. But although we're looking at some of the newer product here lately, but yeah, focusing on the markets in Texas, specifically Houston and Austin.
Yeah, and that's what I want to talk to you about today, because I know you've got a couple different markets. You actually also invested in Phoenix, and so investment strategy. What are the most important factors that you're looking for in an opportunity?
Yeah. So when I first got started, I sort of was more eager to get into different different opportunities, right? And it could be one in Dallas, which we have one, right? And it could be one in Phoenix, which we have one. And so you're kind of spread out a little bit, right? And it's good because you're buying a deal, but then if you're thinking it from a long-term standpoint, it's always best to have them a little bit more centered, a little bit more together. And so sort of has shifted the focus to doing so. And been focusing on Houston and Austin. Austin is only a couple hour drive. So just focusing on those two markets. As I mentioned, B&C multifamily, really trying to push away from the C product, sticking with B, and some of the A class deals as well, call it 2010 and newer. And a lot of those, although they're newer, they're still like value add opportunities, right? From an interior standpoint, you can renovate those properties and be up to date with some of the brand new construction deals. But yeah, looking for those type of opportunities. Try to stick with 150 units and above, and deals where we can really improve, year one, year two, NOI, and as a result have a higher cap rate, by year two.
Nice. And so what, how much, on a percentage wise of NOI, what are you trying to push on the first year? Is it, 5%, 10%? Is there a certain number that you're looking to achieve?
Yeah, there's not really a certain number, because every deal is different, right? And some are going to be more, there's going to be more opportunity for someone than others. But certainly, we're buying a deal at a 4 cap, at the end of year one, ideally, you'd like to increase it, 50 basis points, right? You're at 4.5, right? And by year two, at 5, right? And the market stays the same or even compresses further. You have a deal that's performing at a 5 cap, and you could sell it at 3.5 or something like that, right? So, that's a general rule of thumb that we use. We always want to have the upside, and generally that's going to be through value add opportunities. Some of the newer deals that we're looking at are newer construction, like literally like a 2021 or deals that are still in lease up. And so those there's still opportunity because of what's going on with the rental market, right? Rent growth has been crazy, to say the least, and so you could buy one of these deals and there's very, very, very minimal work that needs to be done, if any, right? And so you're naturally just taking advantage of the market and really pushing on that. So yeah, you'll get a good buy. You'll see it, year one, year two, and how it stabilizes and where you're at that point.
So you mentioned you're focused on Houston and Austin, two very hot markets, two very different markets, and it's fun. It's funny. So I've invested in Phoenix, and people, I hear people say, "Oh, that's overheated," and then when I look at Austin and people talk about overheated, I'm like, well, that doesn't look that bad. Where I could buy A class for 200 a door, under 200 a door, where I'm getting C class in Phoenix. What's your thesis on those two markets and not DFW?
Yeah. Well, we do own a deal in DFW, and I really like DFW, but the challenge with DFW is sort of like Austin, and I'll tell you why we're not, we want to be in Austin, and we already are in Austin, but why we want to continue to be in Austin. Well, DFW is a little bit different, right? I think, it's a large market, first of all, right? I think that, this is only my assumptions. This is not like data that's out there or anything. My assumptions are that, it's a market where, there's a lot of capital going into that market, chasing, risk-adjusted returns, more for long-term, capital preservation, because everything there is like, 4 cap or lower. And so, you're not really getting the crazy bumps, in revenue that you were getting a couple of years ago, right? Maybe even last year. Yes, you're still having rent growth, but you're having taxes increase like crazy, insurance. So at the end of the day, your NOI is not that much of improving. And so that's why I see Dallas Fort Worth as more of a market where capital is going into the market for long term, right? And then for Austin specifically, yes, you're right. You can buy some of these Class A deals. At 200, I don't know if you can find anything at 200 anymore, because some of the B and C class are at 200 and if not more now. And so, yeah, the Class A product is pushing, 250, even higher than that. There's some that are pushing 300 and higher. So, the thing about Austin is that, there's still some good opportunities to find, some of the I guess properties that have been owned for a while, for a long time. And, you can really go in there and you're having, crazy rent growth, similar to Phoenix. And so you have the right fundamentals. A lot of the jobs that have been announced, I mean, they simply have been announced and they're not even there yet, right? So, we're having crazy, occupancy levels as well. And, that obviously is going to drive the rental growth as well. Houston is a different market, obviously versus, Austin. Austin's a little bit more tech, centered. Land and housing is way up there, so it just kind of pushes people naturally to be renters. Houston's a more affordable market, but Houston is a market where you can find Class A deals for high 100s, low 200s, right? Class A deals that are in a great part of town, right? I think Houston overall has had like a little bit of a negative, thoughts, around the market, around, just in general around the market, because of flooding, because of oil and gas, center, many different reasons. But it's much more than oil and gas, right? Like the economy is so much more robust. And so, when people look at that, they're surprised when they see the actual economy numbers, right? And then for flooding, there's very small pockets that'll flood. So you just got to make sure that you don't buy in those areas, right? Overall, Houston and Austin are having, population growth, rent growth. They're the business friendly, markets. And so that's what you want to see, right? They're local and you can really grow in these markets. So, another reason why we're sort of shifting a little bit to the Class A market is, it's the cap rates are very similar to, from B and A. There's not too much of a difference or too much of a gap, but if there's a softening in the market and things, the cap rates start going up, in my opinion, Class A is going to stay tighter versus, the B and C. I mean, they're going to have a little bit of a swing up. And so, Class A to me has there's less risk in it, in my opinion, right? At this point in the market. So yeah, that's the markets that we're in, and we own in Phoenix as well, but we'll be selling and likely getting out of the market.
Nice. And with a massive profit, I might add.
Yeah. Our investors will be, they'll certainly be happy once we exit the deal. But yeah, it's that was a property that we took on and it had its challenges, and it still has challenges, till today. But yeah, we're excited that we're able to really improve the property, the operations and the numbers. I mean, most importantly, right? So yeah.
Yeah, I mean, what property you don't have struggles, even on a B or A class. You're it's great when everything runs perfectly, but you can never count on that.
You can never count on that. Yeah, you're right, and there's always surprises, right? sometimes they're good surprises, and it's like you'll take them, and sometimes they're tough surprises, but you just got to navigate around it and find a solution, right? That's all you can do.
Yeah, this is a perfect segue into my next question, which is what is some of the biggest asset management struggles you've had to face?
Yeah, the struggles. I mean, I would say, I would say communication sometimes has been challenging, right? Systems. This is prior, right? Today we definitely cleaned that up. But a lot of the communication, the systems, simple stuff, right? Like emails, right? You have a ton of emails, and there's all these different attachments and all these different people that are CC'd, and it just a messy business, right? So since then we've actually switched to different softwares, like we use Teams, right? And that's like our like platform that we use, and we even had the property managers share files through there, and everything's all in one system, and just dropped into the proper place. So I would say that, and it makes the communication so much easier, right? And then it makes organization, being organized, and knowing being more efficient. It makes it so much simpler. So yeah, we definitely have cleaned that up quite a bit from the early days.
Yeah, I think communication could be the source of many issues for all aspects of your life, or from the time you're a little kid to the time you die. It's how you communicate is just so important.
Yes, how you communicate. You're 100% right. I mean, another example to that that I would like to add is having the proper communication with your team. If you're the only asset manager, well, you got to make sure you're on top of things, right? But if you have multiple people, then communicating properly with each other. But also one thing that I would add in addition to that is for our deals we have multiple partners, and so we'll have 2 or 3 guys that are on the asset management team. But you got to make sure that you have a specific person that's assigned to a specific duty or task or roles, right? Because then if you're getting communication from the team, from the outside team, it'll just sit there, right? Like, who's going to pick up that question? Who's going to respond? Who's going to give them the information that they need? Well, you have certain people that are assigned, and if you don't have those certain roles lined up from the very beginning, it becomes challenging. I say that because I've been a part of the teams like that, and you just gotta raise your hand and pick up the slack every time, because other guys are not willing to do so. So that certainly has been challenging in the past.
So let's talk about some one of your biggest wins in the last 6 months in the year, because we all have struggles. We all have some really big wins. So maybe talk about one of your asset management win in the last 6 to 12 months.
Yeah, it sort of ties into what I mentioned, having the systems in place, right? Really keeping track of your KPIs, right? Yeah, at the beginning we were keeping track, but we weren't like keeping track of all the little details, right? How many leases we had, how many what was the traffic like all these details like that. We can really stay ahead of the curve, right? If there's a couple months or a couple weeks that come up that are much lower, then you can already see that things may change if you don't act upon it at that time, right? So I think it's important that you keep track of that on a weekly basis. We always try to have our calls with our team, with our on-site team on Tuesdays, right? And so what that does is you talk about and you go over financials over the prior week, right, which ended on Saturday. And so Monday they get the report, they're able to put it together, and then Tuesday you have the call, so everything's still fresh, right? And you can really tackle any obstacles that you see coming coming here soon, right? So I would say that really keeping a close eye and keeping track of those numbers is very important.
Excellent. We like to ask this question of all of our guests as the last question. What is your asset management superpower?
Oh man, yeah, I would say from a personality trait standpoint is communication. I would say from a skill set is more on the construction side. You can have a construction manager, or you can sort of have a construction guy on your asset management team. I sort of kind of fit that role. But yeah, I would say those two.
Nice, nice. Well, Juan, thank you so much for coming on the show and adding value on the subject of what you look for in targeting your market and having really good communication within your team. Where can listeners find out more about what you do and about your company?
Yeah, sure. They can reach out to me on social media, Facebook, Twitter, Instagram, LinkedIn, at the Juan Vargas. And then they can also reach out to me via email. Shoot me an email, juan@genwealthcapital.com. I'll be happy to jump on a quick call and talk multifamily.
Awesome, awesome. So all of our listeners, thanks for listening in. And if you like this episode, please head over to iTunes or Stitcher and like, subscribe, and review this podcast, as it will help us grow our audience. And if you'd like to learn more about what we do at Break of Day Capital, please head over to our website and you can sign up for our newsletter and get our ebook. And we'll talk to you next week. Thank you.